All right, well, hey everybody. Today we're going to talk about whether or not you should sell your parents' home. I am a 37-year-old guy that has parents that are baby boomers right now. Now, a lot of these baby boomers own their own home, and I wanted to share a little piece of tax advice from one of my favorite tax guys, Sandy Botkin. So he's got an article that talks about if your parents own their home, they own it outright, they're getting ready for retirement, and they don't have any of these juicy tax deductions from mortgage interest or anything. He has a hot tip, and he basically says, with one stroke of the pen, both you and your parents can win. You can buy your parents' house. They would get instant access to their home equity without moving, and you would pick up some generous tax deductions. How? You buy your parents' house and then rent it back to them at within 80% of the going rate. Thus, if you can't deduct your mortgage interest as a result of the new Tax Cut and Jobs Act, you or your parents don't have any other homeowner deductions, right? So basically, you could put cash into the pockets of your parents without them having to dip into their home equity loan. This is better than a home equity loan, he's saying. And then it allows them to put their money into safer investments. Perhaps it could be an insurance product, who knows what. But a single family home isn't exactly the best investment to have your retirement money in. It's not a good idea. So you buy it, you rent it back at 80% of the fair market value. Now he says the key is to transfer the home to the kids at a fair price in order to avoid any gift tax problems. Subsequently, both sides should enter into a lease at fair rental value, although the tax court would allow up to a 20% discount in order to get a reputable and reliable tenant. So you can do a 20% discount, it seems like. Once you own your parents' home, you're entitled to the benefits, right? So you get to take write offs for repairs, operating expenses such as utilities and insurance, supplies. You get depreciation on the property, which is massive. It's going to be income that's not subject to self employment taxes. And you can do a cost segregation study with the new cost segregation studies that are so easy to do, along with the bonus depreciation, get massive write offs. So, long story short, guys, if your parents own their home, think about buying it. Now, you'd need 25% down to have a pure investment property. 25% down payments almost always when you're lending, so it's not like your primary residence. But then here's a little last tip. If you were to do this and depreciate it, remember you would have capital gains if you sell it. But he says once your parents move out, you can move into it and make it your principal residence in order to avoid another $250,000 or $500,000 worth of capital gains. And he says it's just a true bonanza. You're going to need to look at this. Sandy Botkin, man, I tell you what, he's got great tax advice. Check him out at taxbot.com. And yeah, buy your parents' home, 25% down, lease it back to them. They get liquidity. You'll have a little bit better situation, and they won't have so much risk on their hands. Good luck, guys.